Dr. Van, what are you making of events there in Cannes?
Well, I guess it's a soap opera, and I don't think it makes sense to try and interpret them in a rational framework. It's a brinkmanship, and it is just trying to postpone the inevitable. I think what the Greek Prime Minister was trying to do was actually to put the ball where it should be, at the People's Court. And by forcing Greece to call off the referendum and trying to make them stick to austerity without providing them an outlet for growth in terms of a massive euro weakness or lower real wages, etc., I don't think these countries can become solvent again.
Dr. Van, Susan here in Hong Kong as well.
Hi.
Does it matter right now to you if Papandreou survives his confidence vote or not?
It doesn't really matter at all one bit. I think what President Sarkozy and Chancellor Merkel did to force Mr. Papandreou to back off, and I think the market's rallying on account of that. I think it just strikes me as both farcical, comical, and if I may add, extremely myopic on the part of both policymakers and investors.
Okay, but basically they have this bailout package in place. I know this next tranche of bailout funds has been stopped going to Greece, but all in all, if we do have this, let's say Papandreou survives his confidence vote, does this mean we have part of the solution in Europe, or still a long ways off?
Italy's also there. We've got a vote of confidence for Silvio Berlusconi.
Regardless of whether the 8 billion is dispersed to Europe or a vote of confidence is won by Mr. Berlusconi or not, I really don't think these things are the issues at all. Ultimately, it's about the fact that the Eurozone really has no growth drivers at this point in time. And Mr. Draghi talked about a mild recession. I think he was just trying to be politically correct and polite there in his first meeting. Eurozone, apart from few countries like Germany, etc., which have productivity and competitiveness, do not have growth drivers. And as long as that is the case, your debt problems can only be postponed but not solved. So I don't think anything that is happening right now is going to make a big deal of difference to the underlying solvency of these countries.
Okay, this is we had William Hague, who is the British Foreign Secretary, saying this. He said that the Eurozone is a burning house with no exits. The first task is to put the fire out. Then we've got one of the framers of the Lisbon Treaty coming out and saying that the house must be repaired but using the same foundations. What do you make of that?
No, unfortunately, I think the more they try to keep the Eurozone's current framework, the more they're going to find that there is tremendous amount of contradictions, keeping tensions alive, and the markets will be doing the comical stuff of going up by 5% one day, dropping by 4% the next day. I think they tried something. Optimal currency area was not there at the inception. They tried to bring that about, but 10 years is too short, and basically what we have seen is that at the first crisis, this Eurozone's hodgepodge combination cannot really hold. So it is better to accept that the experiment, which was bold and visionary, had failed.
Well, is there the leadership to actually make these wholesale changes, Dr. Van, as you mentioned here, with both the two protagonists, main protagonists here, Angela Merkel and Nicolas Sarkozy, facing political uncertainty, having to go to the polls over the next 18 months or so? So, will the hard choices and hard decisions be made?
Oh, absolutely. I don't think, the situation is one thing that human beings, whether they are political leaders or investors, can really comprehend and handle. So that is why they are just going to try and keep the status quo, because that's all that they are familiar with. Everything else that they contemplate is unknown and therefore hostile. And they are going to try and keep this awkward combination going, and that is only going to further exacerbate political and economic and even market tensions before things take on a momentum of their own and spiral towards their logical conclusion. So it might happen in 1 year or 2 years' time, but basically what I see from here on is that any attempt to stitch and cobble the coalition together and keep it going is not going to work.
Okay, Dr. Van, we're just going to get a commercial break, but we're speaking to, and we left off with your thoughts on the Euro crisis, and it seems like you don't think there's a long-term strategy right now. So how do you trade in this market?
No, I think, to try and trade in this market is to basically invite trouble for yourself. It is very difficult to deal with this kind of volatility where the markets just really do not know their own mind. They're acting extremely myopically and also, if I may add, schizophrenically. So therefore, it is best for long-term investors to stay out of this madness and observe it from the sidelines. You can't have markets going up by 5%, dropping by 4%, and then again intraday volatility that is extremely unstable, the volatility itself. So I think investors need to keep a lot of cash, stay focused on real assets, and look at markets that are going to be value, which have dividend yield, because we saw from Bloomberg itself that last 30 years stocks did not beat bonds. As long as we focus on growth and ignore dividend yield, that will happen. So we need to get back to basics as investors.
And how long do you think this madness will last then, Dr. Van?
Sorry?
How long do you think this madness will last, Dr. Van?
As long as the policymakers are unwilling and unable to accept the reality and accept that the post-World War II economic and global financial model is broken, this madness will continue. Otherwise, we have to wait for things to find their own equilibrium, which will take between 1 and 2 years from now.
Okay. Now, okay. So you talked about markets that maybe investors should look more closely at. Which ones are in particular would you recommend?
No, at this point in time, I'm I would recommend extreme underweight in equities. I think if investors are looking for yield, they need to look for EM credit on a bottom-up basis, emerging markets credit. And I think they need to remain long on commodities regardless of demand going down in China, etc. So oil, agriculture, and precious metals are very important. Eurozone has formally joined the race with the US on monetary debasement. They were always in the game, but now it's official. So I think precious metals are important. Keep cash extremely diversified, and look for markets which are completely uncorrelated. Maybe Myanmar, maybe Belarus, or maybe Turkey, or maybe somewhere, So look at markets which, in your opinion, are uncorrelated with the madness that is going on in the US and in the Eurozone, etc.
Yeah, sometimes very illiquid as well, Dr. Van. But thank you so much for sharing your thoughts. It's a pleasure to speak to you.
That is the price you have to pay. Yeah.
Okay. Well, have a good weekend. Dr. Van.